I got to watch you in action. I mean, after you were having some of the best years ever, you know, 1,000% year was that in '99. I mean, that's how you basically got Bill's attention to become a portfolio manager. Like, you know, he just said, "I want a piece of this," and you've had some phenomenal years in which you've just had these mind-boggling, you know, triple-digit gains in a year, and you've gotten back to back where it's, you know, compounded out to just again astronomical things. But you've also had the tough years, the times where things haven't gone right for you. You get a string of losses, and that can be really tough on your psychology. So, how how have you handled it, and what have you learned from the process?
Thanks for reminding me, Justin. Um, no, it's tough. My career has been very much a roller coaster. I've been pretty open about it. And particularly, really, I'm talking about my personal account, not the firm account, because we don't do that at O'Neill, the roller coaster. We
Mhm.
have a much more upward trajectory. And but with my personal account, I think I can say I have a weakness. It's in my risk control. I get, I can go on these huge runs, and I'm very slow to come to terms when I'm no longer hot. And I do have a tendency to trade very aggressively. So, I talk about in the workshops, and when I do the trading psychology section, that over concentration and over leverage are the two elements of um, blow ups. Like, you need both of them, and I do both of them. And so I've had a lot. I've had quite a few blow ups in my career. Walking away is what you should do, and basically stopping trading, coming to terms that you're just not on, and taking a break. But I never take a break. That's the problem. In fact, I don't think um, I've almost never taken a vacation. It's really, um, it's tiring after a while. But I do have this kind of bullish bent in me, and I have a lot of confidence. And when things are working, and, I just think they're not going to stop. And I think, oh my God, I'm a genius. Well, I'm up 50 fold. Like, I'm going to be up 100 fold.
Yeah.
And so, all the things I talk about in the trading psychology section of the master's workshop, and all those rules, and the tendency for people to extrapolate short-term moves, and to get overextended, and not to set a line in the sand where you're going to begin to raise cash. All these things, all these rules and ways of looking at things are so critical. But honestly, I violated every single one of them in these blow up periods. And so, what I've talked about in these kind of personal journey presentations I've given. There's two of them. I just gave back at the first couple of days of September to a joint IBD meetup group up in San Francisco. And I talked about my latest blow up, and which was truly my most profound blow up in terms of money and in terms of percentage. Like, I thought it couldn't be worse than 2014 through 17, but
You
oh
thought
boy.
87% was as bad as it would get,
Yeah,
huh?
I thought, wow, that was pretty bad. But this is like, literally, this was really a blow up.
Mhm,
And so, in my margin account,
mhm.
thankfully, I'm not allowed to margin all my accounts, so I've survived in some of my accounts. But this one was truly profound. And so, what I've talked about is that it's not enough to know what rules you're breaking, because you can do a post analysis and discover where you're going wrong. And if you do a post analysis when you're in the midst of a losing streak, you'll realize that you're trading when the general market's not in your favor. You'll realize that you're not cutting losses. You'll realize that maybe you're buying extended. You'll see all the things that you're doing that are wrong. And you go, okay, well, that's pretty simple. I know what I'm doing wrong. But it's not enough, because for me, I know that what I'm doing wrong. It's just I keep doing it. So
Yeah.
you have to go a little deeper, or a lot deeper actually, and discover, well, why am I breaking these rules, and why do I keep repeating this cycle of, making a great deal of money and then losing a great deal of money? For me, what it's came down to is this feeling of kind of worthiness, or a lack of worthiness, and this like a deficit there. And for me, more money meant more value. And so it was really get this insatiable appetite to feel good inside, and it couldn't be satisfied. So no matter how much money I made, I just kept putting the bar higher. Like, it was never enough. And in this last run that I had, so I actually was, people always ask, so what happened when you blew up your account, and did that first presentation, like lost 87% of your money? Were you able to come back? And I did. And I thought it might take 10 years to come back, or at least. But I came back. The COVID, as bad as it was good for traders who
Good
knew
for our style
for our
specifically.
style and where to deploy those funds. And of course, I got on board on Tesla, and I made back all that money and then much, much, much more in a 2-year period. I was up almost 50-fold, which is, I've never had a run like that back to back, that compounded to those types of gains. And um, and then I managed to lose a great deal of it, and in my margin account, literally blow it up, just because I was so concentrated, and so playing with a lot of leverage.
Hmm.
And so it was really, when I was making that money, it was just like an itch I couldn't scratch. It's just like I just kept playing. Like, I wasn't sober enough to kind of look at my account and say, wow, I just made a lot of money. I don't have to work anymore. I'm going to take half of it out, put it in the bank, and play with the other half. Like, that would have been the sensible thing to do.
Well,
And I
Charles,
know
it
that's
almost
something
it
that you were
almost
doing before, with a number of the runs that you went on before. I know that was something that you typically did.
Yeah, well, I always am right selling into strength, right? But the thing is, I always redeploy on a
Gotcha.
pullback, and sometimes these pullbacks turn into major bear markets. And rather than saying, "Oh my God, this is no longer a pullback within an uptrend. This is now a broken stock or a broken market," I just keep thinking, "Yeah, but I know this stock. I know
Hmm.
this. And this is my long-term one." And
The
I
conviction.
honestly, that's what I did with Tesla. Was I said, I'm holding this stock for 10 years. I don't care what happens. I'm holding it. That's how much I believe in it. And I still have that belief. But when you're concentrated and on margin, and if stock falls 75%, it doesn't matter. You're going to go broke. That's just how the math works. So, if had I not gotten margin calls, I surely would have been I would have lost that entire account, because I had to raise funds. I was forced to raise funds. I didn't want to, but I had to.
Charles,
Um,
I mean, it almost seems like, when things were going so well and you're talking about the not being worthy of it, that it's almost like a self-sabotage, right?
it's
Where
it's definitely an element of it, Arusha, that it is self-sabotage on many levels, of feeling like, there's two things you can do when you don't feel like you deserve
right.
your performance or your wealth. You either maybe get some therapy and change your mindset and say, you know what, I do deserve it. I work hard, and I'm a good person, and I've, talented in this one little way, and I deserve it. And then there's the second way, is like not believing you deserve it, and then sabotaging yourself and taking whatever actions you do, even if they're kind of unconscious, to basically put your external environment back in line with how you feel internally, which is what happened to me. Basically,
Right.
I said, you know what, I don't deserve this money, and then I lost the money. So, you know, one thing that is interesting that we're doing this segment today is I had I met with my therapist yesterday, and we were talking about the market the whole time. And I was telling her, like, so yesterday, right, was a big day in the market, right?
Right.
Yeah.
And I had a big day in the market, you know, in my personal account, a big percentage day. And I was telling her how I'm just a little bummed because the amount of money I made off my new base was whatever it was. Let's just say I made 40 grand or something, which is like, that's a lot of money. Like most people would say, well, that's a lot of money. Good job.
Per day's work. Yeah.
A day's work. It easily would have been 7 figures 2 years ago.
Mhm.
And so I'm used to playing with bigger numbers. So it's kind of like, I was just bummed.
Mhm.
I was like, wow, this is a bummer. And so one thing we talked about, which is really important, I think this is a message to the to the audience about how to protect yourself from um, blowing up and really messing up badly, is really implementing some level of self-care, where, like, for me, I'm most comfortable when I have a lot of money in the bank. That kind of allows me to take on the risk I take on in the market, because I know, like, worst comes to worst, I'm going to be okay. I've got money. But over this last period, my cushion is much smaller, you know, in terms of savings. It's just, it isn't what it was, because I kept taking money and putting in the market. So I've implemented this approach of taking out 25% of my profits every time I reach a certain level.
One other thing I wanted to ask you about, Charles, is how you've been handling these accounts differently. You talked about your margin account, and certainly over concentration plus margin can equal great success or great disaster, right?
Yeah.
It's you have to be very careful with that. But you know, your firm account handled very differently. Certainly, there's an accountability there. You know, other people are watching, and you can't just you have to justify your actions to a certain degree.
I would never trade someone else's account, you know, that I have a fiduciary duty to, the way I trade my account. I take on a lot more risk in a way that my own account is really almost more a personal reflection of me. And because I have had to deal with, you know, I've dealt with these issues of value and worthiness, that's kind of how I prove myself. You know, more money means more value, means more worthiness. And I don't treat the other accounts, that certainly any accounts that I trade for other people, don't, you know, that doesn't represent me. That's my job, and I'm trying to protect them and to make them as much money as I can, and be responsible about it. So somehow it is just a different way of looking at things. And of course, you are assessed, and you know, there are people looking over your shoulder, so you can't just go in and violate your rules. So so that's a big difference there between trading for other people and trading for yourself.
Mhm.
And but
Well, it's
that's not an
th-
excuse, though. I mean,
yeah.
you know, that's just what can happen, though, is, you know, when there's no one looking over your shoulder, you know, it's possible, if you're not aware, um, to really mess up. So there's that. And then with regard to the Roth account, you know, just the fact that it's not a margin, you can only do so much damage. I don't really trade them that much differently, but the Roth account is a much slower way
Right.
of trading for me. And the margin account is almost like, I just go for it. You know, I'm just aggressive. I mean, I'm aggressive in all my accounts, but I'm ultra aggressive on the margin account, because you can just make so much money trading on leverage. And so
It,
anyway,
It's fun when it works, right? But you know what? Not to put on the therapist chair here, but I think it's interesting that you said for the accounts when you're trading for other people, how you feel like you have to protect them. You know, so maybe you have to do that for yourself too. You know,
Well, yeah,
learn to protect yourself.
Yeah, that's a great point, and that's what I think I'm talking about now with regard to like self-care and pulling
Yeah.
money out and putting into savings. Is that that is a way of protecting
Yeah.
yourself,
Yeah,
you know?
absolutely.
And so that is what I'm doing finally for myself after all of these years.